Good afternoon traders, and welcome to this week's Forex Focus, the show where we look ahead and see what could be setting up in the FX markets. I hope you've all had a good week and you've all managed to make some nice profits. We've certainly got some great opportunities that could be presenting themselves in the next week. So without further ado, let's jump over to the charts and take a look at what's setting up. Now, for the majority of the opportunities that are setting up this week, we're looking for a break of a trend line. And now this is one of my particular favorite trade setups because it seems to be the one that's sort of the most straightforward to trade and also offers one of the highest probability setups. And before we look at the actual opportunities themselves, I just want to demonstrate to you what that actually looks like when it really sets up properly. And we had that in a bunch of the pound pairs this week, and we didn't actually really trade the pound pairs because, as I said in last week's FX Focus, we were a little bit we were cautious going into this week in terms of shorting the pounds. We thought there might be a little bit of a reaction there, so we were more focused on the euro pairs. But having said that, the pound pairs did set up beautifully and they did give us some nice trading opportunities. And that's ultimately what we're going to be looking for going into this week's trading in some of the other pairs. So if you take a look at what we are, the type of setup we're looking at. So you want a momentum move to the downside, which you have here. And then you want to see the market pull back somewhat and give you a pretty nice orderly pullback, which is what you get here. And then basically you want to encapsulate all of that price action with a trend line. So you want a line, not a horizontal line, a sloping line, sorry, that sort of goes back on your charts like that. Connecting some of the wicks together. Sometimes you can go through candles. What I basically try and teach all of our students is basically with a trend line, what you're looking for is you're trying to get all of the price action there. So if you've got two wicks that are sort of like news candle wicks all the way down here, and then you've got the majority of the price action sort of all the way up here coming along like this, and to try and connect all of that, you'd have something almost sort of going vertical. Then you can kind of ignore the wicks and cut through some of the candles. Now you don't want to cut through everything so that you end up having a trend line looking, something like this here. Oops, when I get that on there. So you don't want it looking like that there. That doesn't make any sense whatsoever. But what you are looking for is, you can see here, sort of like a sloping line of support or resistance that really sort of encapsulates the majority of the price action. So you can get an idea as to when the price is breaking the pattern, so to speak. Okay? So that's the sort of setup that we're looking for. All right, that's what we're going to look for. Because when it breaks a trend line, as you can see there, you can either get in on an initial break of the trend line like you have here, or you can wait for the market to pull back a little bit as it does, go sideways, and then once it's proven that it's broken the trend line and it really wants to go, you can then get in on a break of these lows here. And that's the sort of setup that we're looking for this week. So let's go take a look at the charts. We'll start off with the pound yen, and unfortunately all but I think one of them this week are going to be 1 hour charts. The others, they're just the setups, the technical patterns aren't there for this week. So the first one is this one here in the Australian yen. As you can see there, the market did give us a nice momentum move to the downside. It's since been tracking back along here. And like I said just now, in terms of getting the news candle in there, that's such a big momentum move there. That is going to be an extreme. So what you kind of want to wait to happen is you want to wait for normal harmonic price action to set in before you then get involved in a trade, and before you then start trying to read technical patterns. Because after a move like that, there is no real technical pattern. So I wouldn't put in a trend line like this, because there's just... it's going to get you, it's going to be bad news. You're going to get into trades that aren't the right trades. You want to try and see what the general market is doing when the market is behaving in a rational manner. You're not trying to get involved in these sort of irrational moves that you have over here. So that's why we've skipped this wick here, and we've just started connecting it from when the market started to behave rationally. Okay, so the market then pulled back rather. Starting to go sideways. If we get a break of that trend line, then I'm certainly going to be looking for a move down towards the 72.40 handle. We then have the Aussie New Zealand. Now this one isn't one that we're trading a pullback of a trend line, so a sloping line of support or resistance. This one here, we're looking to play the breakout of a congestion zone. The market has been moving down, as you can see here. It's been moving down, 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 down. It's now since consolidated, and I quite like these long consolidation zones because it does mean that you're then going to get a measured move. Now, one of the theories is that the move that you get, the momentum move that you get, is about as big as the congestion zone, i.e., if the market sort of ranges from here to here, then you're likely to get a move up or down of about that same sort of distance there. So maybe the market coming down to this sort of area here. I don't necessarily subscribe to that, to be completely honest with you. I know that people do trade it and they are successful, but that's sort of not, I don't project price targets like that. I prefer to go for support or resistance levels as opposed to trying to measure a congestion zone and then flip it vertically and say, okay, the market's going to move down to there. Having said that, we are certainly expecting a move to the downside. The market did bounce off of these levels. If you were trading smaller, shorter term time frames, then there are a number of different ways that you could actually trade a congestion zone like this to make profits. But for the Forex Focus, obviously we're not trading that close to the market. So for this purpose, we're looking for a breakdown of this congestion zone here. We then have the CAD-JPY, which is pretty much, and that's not going to look at it on the 4-hour chart, we're looking at this on the 1-hour chart, which is the same with all of the other yen pairs that we're playing here. It's pretty much a break of the trend line. So we've seen the market pull back somewhat. Now the market is starting to behave rationally. We're looking for the market to break this trend line. Once it breaks this trend line and confirms it wants to move to the downside, we'll be in there taking a short with our stop above the highs. The same goes for the for the Swiss yen, as you can see here. So this one has been pulling back somewhat as well. Now the one thing that you have to remember here, because these are pretty much carbon copies, the Aussie yen, the CAD yen, and the franc yen, they're exactly the same trade, more or less. So you're not going to want to take all of them together. And if you do, you're going to want to take it in a reduced risk or reduced position size, sorry. Okay, because essentially you're getting into the same trade. So if you get into all of them at the same time, you're just sort of tripling your risk for no particular reason. Now, what we're going to do with our own accounts, and remember this is only for educational purposes only, so we're not giving you trading advice, we're just explaining to you how we're going to trade our accounts. And for these particular trades here, the way that we are going to trade them is potentially take every single one of the setups just to sort of mitigate the risk a little bit, but obviously reduce the position size. So rather than taking a full position on each, we'll split it by 3 and take a third on each one and see how that sort of plays itself out. We then have an opportunity in the euro dollar. The euro dollar, as we said last week, we do believe that the euro is going to go lower in the long term. This is definitely a play that we're very, very interested in. At the moment, it looks like the markets are being supported a little bit, but we ultimately believe that when this does break down, it's going to break down in a big way. So we're looking to sell until it breaks back up above sort of like this area around here, around the 1.1431, and sort of holds above that level. We are going to remain bearish because fundamentally we think there's a lot of uncertainty in the Eurozone right now. And also from a technical perspective, we think it's a selling opportunity. So until it gets out above this level here and holds above this level, we're going to remain sellers, we're going to remain bearish. And then finally, the opportunity that we're looking at on the New Zealand CAD is one that we spoke about. I don't know if we spoke about it in last week's show. I think perhaps. Well, anyway, it's a break of a trend line. It's a little bit different to the ones where with the Aussie yen and the CAD yen, which we're looking for sort of like an immediate break. So the trend is down and we're looking for a selling opportunity. What we're looking for here in the New Zealand CAD is a breakdown of the trend, because the momentum at the moment, the trend on this particular chart for this particular pair here is actually up. So it's a little bit different to the CAD yen. Let me just go back to the CAD yen that we were looking at just now. As you can see here, the momentum move is down. So the trend is definitely down for this pair here, and we're just looking for a resumption of the trend. What we're actually looking for on the New Zealand CAD is a little bit different. We're looking for a bit of a trend reversal, because this isn't just trading a pullback here. This is the market actually trending to the upside. But we feel that there's going to be a breakdown here. So we're going to wait for the market to break beneath this level here, really prove to us that it wants to go lower. So we're not going to get in on an immediate break of the trend line. But once it proves that it wants to go lower, we'll then be looking to take that to the short side. So both those opportunities are breaks of trend lines, but they're slightly different trade setups, okay? But the important thing to remember is that as traders, we don't want to sort of pigeonhole ourselves into, a certain type of trader. You want to be able to trade all different markets, because that really and truly is going to be the way that you're going to be successful. If you say, and I've said this on a number of different episodes here, if you say to yourself, I'm just going to trade this specific setup, then when the market doesn't trade that setup for you, or when it doesn't present that setup for you, then you kind of force yourself to take positions that aren't really there. Okay? So that wraps up this week's Forex Focus. As I just said just now, just kind of be a little bit wary about pigeonholing yourselves into becoming a specific type of trader. We've given you a number of opportunities that we're looking at this week. It's obviously, again, for educational purposes only. We're showing you what we're going to do with our own accounts, hopefully in a bid to help you improve with your trading. And I truly believe, and I said this in a webinar this week, that you don't have to be perfect, all right, to be a successful trader. In fact, trying to be perfect is often the wrong way to go about things, because you're looking for that perfect entry, for that perfect setup. And then you come back and you say to yourselves, well, after the move has happened, well, it's okay in hindsight. You can always trade these things in hindsight, but the hard right edge of the chart, it's a little bit more difficult. Okay, so, and the reason for that is because you're looking for that perfect entry. If you just accept, all right, that there is a chart pattern setting up on your charts, there is an opportunity there, all right, it isn't the best one, or it doesn't look perfect rather, so I don't mean to say don't trade the best setups, because you do want to wait for the most high probability setups, but just accept that when you're in the heat of battle, it's not necessarily going to look picture perfect, and you just need to learn to recognize that when you're trading at the hard right edge. Okay, so sort of like good enough is sometimes the right trade to take. But anyway, I'll get off my soapbox. I've blabbled on for way too much for this week's episode. Thank you very much for watching. I hope you all enjoyed it, and I look forward to seeing you in next week's episode. So take care now, and have a great week's trading rather.